Now we'll talk about accounting, introduction and bookkeeping of keeping of books of accounting. Right now, we want to talk about the users. Who are the users? Who are the users of financial statements? Okay, who are the users? Okay, one, the users, the statement. What the statement is enable all those who are at stake, all the users to make use of all the activities, the information they are in the accounting. Now, who are the users? One, the management of a company needs it. Why do they need it? They want to know the profitability. They see when they see the financial report, they will be able to know, to evaluate the performance and in terms of profitability, and to know the details of the assets. These are the basics. They know the profitability and the details of the assets. That's why the management need to use it, so that they'll be able to assess the performance, the overall performance of the enterprise. Okay. Now the second group are the employees. Of course, employees need this financial statement so that they will be able to negotiate. Okay, so that they will negotiate their wage. Okay, for the security, and of course they should be able to know the security of their job. Then negotiate. Okay, their wages. These are the major reasons. Okay, the stake, the security of their job, and the negotiation of their wage. Okay. Now the next people who need it are the shareholders. Of course, you know that sometimes we see the companies this thing. You see what you call shareholding. Shareholding. Sometimes you see 40%, 20%, 30%. The higher your shareholding, the higher your risk, the higher your loss. Okay. That if the company make loss, that you bear it. Your this thing, that the profit is proportionate, or the performance or the outcome of the company's profit or loss is proportionate to the risk you have taken as a shareholder of the company. Okay. Now the third one is, or the fourth one is the trade creditors. Those vendors who supply goods and services to you. Those people need it, the financial statement, so that they will determine the organization liquidity profile. That's what you need. Okay. And then ability to settle its debt. Okay. These are the things that the people need. That is, the third people who need are the financial institution like banking, banks, like insurance company, where you take insurance cover for your employees, for the indemnity, or even the management. Okay, those are the people who need it, so that they will be able to determine a kind of ability to repay. Okay, yes, to repay. That's the financial institution. I talk about banks also. Then financial institutions. Those are people who will determine whether you're able to pay the loan that you have taken. Okay, then that's another thing there. Then so that they'll be able to analyze or whether to give you more loan or to stop so far, and the assets to evaluate the level or the weight of the collateral, whether it measure up with the loan you have taken. The next one is the sixth one, tax authorities. Of course, you have, tax authorities always come to assess your distance and see your tax, your profit before tax. Then they will bring their own tax. If what you have stipulated or computed as deductible are not deductible, they will have to go and challenge, or so to say. They will apply what you call BOJ, that bore the best of judgment. They use the tax authorities measure to determine and give you. Now you can have computer, have your tax before profit before after tax, so to say. Now those tax authorities need it. Now they need it so that for the payment of the tax. Okay. Now another one are the public. Public will want to go into your company. They want to be part of your company. What do they need? They need quarterly, where they will have to go a copy of your published financial statement and results. They will have to assess whether I can go into, like for instance, Dangote. Now who diversified, that the company that has diversified into oil now. Let me tell you, Dangote's name is ringing, but shareholders are the major owner of the company who have deemed Dangote as one of the best or one of the company. There are other ones anyway to risk their finance into. Okay, that's just it. So the public want to know who owns this company, how are they performing, how do they know that they assess it through the financial statement. Now the auditors, of course, the company's accountants, is an internal auditor, so to say, if they are not all that buoyant. But the external auditor will come in to assess, so that they will go through all your assets you claim to have purchased. They will have to go, we shall discuss about the source document, your invoice, your receipt, and so on and so forth from the vendor. They will go to field. The external auditor will go to field, compare it with what you have computed, whether you forge those invoices or not. Then they will be able to assess it and do what the right judgment to it. So these are the people who need financial statement. Thank you. You're welcome.